How's it going, everyone? Should probably have my mic in front of me. I was more concerned about not being late, like some of our friends. I'm not late. It's 2:30 on the dot. Took the day off from work. I still have to take some meetings later, but you know what? Happy to hang out with everybody, make sense of this market. Sea of red out there. Sea of red. Sea of red. Look at all you. Thank you so much for showing up. Really appreciate it. Let's jump into it. Trying to get better at these transitions. That was pretty smooth. So, man, Amazon's down 2.2% right now in anticipation of what's going to happen later, probably because of Meta and everybody else that reported. Alphabet's up. Thankfully, Alphabet's up. Very happy with the earnings report there. Let me put my phone on silent for the time being. I apologize. That is the big disappointment. We're going to get into it. This was not a bad quarter. All right. I'm bullish. I'm still very bullish. In the middle of writing an article, wanted to share my thoughts with everybody. Amir and I are going to really dive into this tonight when we do something. I'm going to be on his market close later to discuss Amazon. Very excited for that. Even NVIDIA is taking a little bit of a haircut. Not much. I mean, still over 200. I didn't think it would be here right now, but you know what? It is, and I'm happy. I'm a shareholder. I think a lot of people are shareholders that follow all of us. And if you're not following Amit or Tanner or Matt or Chris or Tevis or Roy and data-driven investing, I mean, go follow all those guys. They do a great job. Can't say enough good things about the crew. PayPal, yeah, I mean, that's the story of freaking everybody's life with PayPal. I'm a little surprised at QXO. This is why I don't take a full position immediately. Obviously, I purchased before, and I plan on scaling my way in. Thank you so much for the new member. I truly appreciate it. Really appreciate all the support. Thank you so much. SoFi is down a little bit. I'm not shocked. But you know what? It's okay. If you heard me with Tanner last night, I am a reinvigorated SoFi bull. We'll see what happens. Interesting that Verizon slipped below 40 right now. I'm a little surprised at that, but you know what? It is what it is. Got a dividend of close to 7% on that one. So let's get into a few things. I put together a bunch of clips of stuff from today and last night that I want to react to. I want to discuss Meta, but before we do all that, let me get some of my notes out. So what's crazy is that Meta was down over 12% at one point. I mean, this company went down to around 650 or so despite beating on revenue. I mean, there was a one-time tax charge. I will really explain all that in a bit and later tonight. Microsoft, I don't think that deserved to be down. I mean, that was an outstanding quarter. I mean, everybody who's selling is freaking out. And this is where I'm going to really go after a few things. All right. Break down the dividend harvesting portfolio. That'll be an entire episode. BMNR, yes, down a lot. I actually bought more Ethereum before, maybe an hour or so ago. I bought it just under 3,800. And I did not buy more BMN. Where is BMN? Whoa. Hold on. We may do a buy live. I'm not going to let you see the account, but BMNR around 45. That's interesting. I am going to buy more BMNR. At some point today, I will buy more BMNR. I'm not going to do it this second because I'm going to have to move some stuff around. Take me a couple minutes, but yes, thank you for pointing that out. I will definitely add some in a bit. Absolutely. All right. So what else do we have going on? Alphabet's up. That's great. We got Apple and Amazon later today. And it looks like, you know what? One of the reasons why it looks like people are panicking is because the advanced estimates for Q3 GDP was released this morning, and it's showing that the economy is only growing at 3.1% when there was estimates of 3.8 to 3.9%. Oh no, more than 3% growth. I mean, crazy talk. I'm still not happy about the Fed commentary, but good old Jerome Powell did throw some cold water on the ideas that this is an AI bubble, which I was pretty happy about. We got Eli Lilly that's up nearly 4%. Chipotle, that's a fan favorite by a lot of people. That's down over 15%. Visa's up over 2%. And it looks like the sentiment around President Xi and President Trump is lukewarm right now. We'll see what happens with that. I mean, right now, I think all eyes are on Apple and Amazon. I mean, that's what the majority of people are focusing on. So let me discuss Meta real quick, and then I want to get into some of these things. I got a bunch of videos, short videos that I haven't seen. I saw one of them. The other ones I haven't seen. I'm going to go react to some of them. I really want to hear what some of these people said. I got an issue with something I heard last night, so we'll get into that. But once again, if you followed me on Seeking Alpha for a while, you know what I'm about to say. I get absolutely crazy when stocks sell off with an earnings report in a millisecond. It drives me absolutely crazy. Now, full disclosure, do not make any decisions based off of me. I'm not a financial advisor. I'm just a nerd that does a ton of research. Okay. So keep all of that in mind. Now, Meta, this is why I get so annoyed. Within a millisecond, it was down, 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 just like 311, down, down, down. But I guess that's showing my age, right? You can't tell me that anybody who is selling or the algos or anything, I mean, obviously algos, you have stop losses, short-term traders, et cetera, et cetera. But in full disclosure, I'm a Meta shareholder for a long time. Meta missed EPS by $5.66. They came in with $1.05 of EPS. People freaked out. But once again, this was down going into the earnings call. This was down significantly before anybody had time to open up the freaking earnings report and digest it or even read it. So that's absolutely crazy. And for people who actually read the earnings report, there was give me one moment. Let me make my stuff a little bigger and go through it. An $18.95 billion tax expense, which increased more than $16.5 billion quarter over quarter. Okay. That's what people were freaking out about. And also they're trying to equate the spending to the metaverse. Two ridiculous things. Here's why. Anybody who actually listened to the earnings call or read the transcript would have heard Meta's CFO, Susan Lee, discussing that the transition to the new U.S. tax law resulted in an accounting charge in Q3, but they're expecting to recognize significant cash tax savings for the remainder of 2025 and future years going forward. I mean, think about that right now. So Meta missed EPS by $5.66, and it was down because of a one-time non-cash reduction in deferred tax assets that Meta no longer anticipates using under the new U.S. tax law. Their tax rate would have been 14% if it wasn't for that charge. Instead, it was 87%. I mean, this is why I get crazy about this stuff, because nobody that was selling actually read that, nor do they take into consideration that this was a one-time thing. And in Q4 and in 2026 and 2027, they're actually going to do better because of this. It was a one-time charge. Meta is a gigantic company that can write a check for that. So, I mean, come on. Absolutely crazy. And I don't understand why people want to continuously not do the research and just make decisions off of not doing the research. And when you actually do the research, I'm going to read part of what I've been writing because I don't want to just pick it apart. Give me one moment. Let me See my phone? Thank you so much. So the reality is that Meta has continued to increase their capex, but their cash from operations continues to expand. Meta has generated 107.57 billion in cash from operations in the trailing 12 months, which is an increase. Keep in mind, an increase of 17.79% year over year, or 16.25 billion. The bottom line is that in order for Meta to increase their revenue, they need to reinvest in their business. Despite capex increasing 65.15% year over year to 61.53 billion, Meta is still generating over 44 billion in free cash flow. The other aspect that I believe is overlooked at the moment is the actual metrics from Q3. Meta's cash from operations increased by $4.44 billion. It was up 17.36% quarter over quarter, while their capex increased by 3.31 billion. So cash from operations increased on a dollar amount just over $1 billion more than capex spent, which increased free cash flow. And everybody who follows me knows I'm a big proponent of free cash flow because it's cash in versus cash out. It's harder to manipulate. And when I say manipulate, I don't mean any fraudulent or anything like that. Manipulate in the fact that you don't take income tax charges, one-time charges against it. It's a measure of cash in versus cash out. And that's why I like free cash flow. And you look at the cash from operations statement, the cash flow statement. It's just, this reminds me all too much of Amazon. Amazon Q2, what happened? Oh, cloud didn't have the operating margin. Cloud operating profit wasn't what everybody expected. But they're not looking long term. They're looking day to day, which to me is freaking annoying. So I'm really bullish on Meta still. I think this is a crazy reason not to hold the stock here if you're already in it. Now, look, there may have been people that were trading that got hurt. Okay. I'm not a trader. I am not a day trader. I'm a long-term investor. Let's see. This is something that I want to listen to, and I had some problems with it. So I am clicking the button. There will not be audio issues. Do not worry. No audio issues. So let's listen to this real quick.
As always, that going into this quarter, the bar was extremely high in terms of the move in the stock.
Yeah, so extremely high. Going into this afternoon, a giant run, and still they managed to beat on almost every metric, which was really, really impressive. I mean, she talked about, Mac talked about the search fear, which was, it could still be there for sure. But
by the way, have I not kept saying search is not dead, search is not dead, search is not dead? Have I not kept saying that? When everybody thought that search was going to be cannibalized, have I not been saying this for years at this point? I mean, there's no indication search is getting cannibalized. Just saying.
It isn't happening right now. And in fact, we might even be seeing, could this be even better than we thought? So there's that, which is huge, which obviously drives most of the business. Then you had some good numbers from YouTube. We had the cloud also, that was very good. Yep. And there's still a lot of momentum that is not in this quarter. So, I mean, just it feels like, remember 2 years, was it 2.5 years ago? Maybe it was 2 or 3 years ago when Microsoft announced the AI partnership. Microsoft seemed to be just, so far ahead of Google out of the gate. Right. And that was the way it was for a while. Now things seem to really feel like they're changing somewhat. Yeah. And so some excellent momentum here. It's still not expensive here. I think, let's hear the call. Let's hear about the spend. But there was really a lot to like here. And it's up a lot. But still, if you think about where they are in their evolution and where they are, the momentum that they seem to be having and the multiple that it trades at, all of that is pretty good here.
So that existential threat to the core business of search seems to be at least put to the side at this
moment,
point, right? And the
at
gap
the
between it and and ChatGPT seems to
Right.
be narrowing as well, which is also the concern.
And don't
that
forget
was
also
way
about their
behind.
chip deal.
And their chip deal. Yeah.
But here's the thing, they're two very different businesses, right? So Microsoft accrued all that market cap. They had that deal with OpenAI out of the get-go. They have an ownership stake of it. They just saw that transfer. And so now it's, I think, valued at $135 billion or something like that, which is great for Microsoft. But Microsoft deal with OpenAI was really to leverage off Azure, to put their models on there and then create product across their suite of services to upsell enterprise clients. What's going on with Google and Gemini is very different. So 2 years ago, when they launched Bard, which was the predecessor of Gemini, it was just a disaster. The rollout was horrible. And I think a lot of investors were like, listen, these guys are only going to cannibalize this amazing business, which is, digital ad business. And so now Google Cloud has been gaining on AWS, which is the #1 market share, and then you have Microsoft Azure in the #2 spot. But the problem with cloud gaining is that it's becoming a greater percentage of their revenue and at a much lower margin, if you think about it, right? So that's kind of bringing down the gross margin for this business. But I would say, if you're going to compare it to OpenAI, the way that they are growing users, and obviously they are monetizing it very different than OpenAI will. OpenAI will have to eventually do it with ads and a whole bunch of other services. So what I think investors have come around to is that they're not cannibalizing that ad business as much as a lot of folks thought. I think there was some analysts that we've had on there and said this is an existential threat. If you look at Google overlays, they're actually a really good way to Google search. So a lot of good things going on there. I'm not sure you run after it. I think Karen's point is that, it trades at a multiple. It's pretty reasonable. I think if you're looking at that versus Meta right now, they trade at similar multiples. And I think what Google has going on is far better, in my opinion, than what Meta has going on.
I mean, there's a clip. Honestly, I thought it was that one. He was saying some really bearish things about Meta last night. Alphabet's quarter was incredible. I need to really go through it more deeply, but they can't keep up with demand on cloud. I think Google/Alphabet, if you want to get technical, is one of the easiest buys for me. And I was screaming this heading into the lawsuit decision. I was screaming this at the beginning of the summer. This had no business being where it was. I think I had said my fair value at the time was around 290. I'm going to have to revisit that because they're closing in on it. So I'm going to have to revisit that. But the fact that they weren't trading at the same valuation as Apple was absolutely crazy. And I mean, it's just insanity. Let's see. Which one do we want to go to? Tech earning. This was from today. I just want to see. I don't know if I really. Let's listen to G Munster real quick on his takeaways. Let me see if I agree with this.
Alphabet shares still up and Meta still sinking despite the quarterly beat. Calls from Microsoft and Alphabet both kicking off just a few minutes ago. Fast Money friend Gene Munster has been listening in. He's the managing partner at Deepwater Asset Management. Gene, I want to start off with Meta. So you think that you figured out why it is down? Why?
Yes, Melissa, I guess the answer was clearly in front of us when those numbers came out and the stock gap down. It's just a simple dynamic between revenue growth and expense growth. And if we rewind to the past 2 years, Meta has grown revenue faster than expenses by a wide margin. 2024 revenue growth about 23%, expense growth about 8%. The first 2 quarters of this year, revenue growth 22%, expense growth 12%. They report their September quarter with 23% revenue growth, but expense growth of 32%. And throwing insult onto that is the commentary about the third-party capex spend for next year. And this aggressive is the word that they're spending, substantial increase. Expenses related to that. We're probably going to see something like 18% revenue growth for next year for the top line. The street's at 16 right now, but probably 18%, and probably expenses growing north of 30%. And so essentially the script that we've seen with Meta over the past 2 years got flipped. And I think it's just that simple. If you look across the board at Zuck's ambition around AI, what he's trying to accomplish, look at their engagement. I mean, just like profound engagement growth, accelerating engagement growth. 43% of the world uses their products on a daily basis. Those rate of usage is accelerating. So it was a great quarter with the exception of that dynamic, Melissa, and I think it really stopped.
Here's where I'm at on this. All right. I really like Gene Munster a lot. I think his takes are really on point almost all the time. I'm going to disagree a little bit here because this isn't the metaverse all over again. This isn't Meta just buying up GPUs for the metaverse when nobody is expanding on their cloud spend. This isn't that. Every company is increasing capex and spending. Of course, Meta's expenses are going to grow. Zuckerberg has told us this time and time again. He would rather overspend than miss out on the profitability. This, to me, is not something I'm worried about at all.
Young investors.
You know, Gene, this is one, again, I saw your notes earlier. You're kind of confounded. Microsoft, similarly. You know, when I look at the downtick in earnings growth, though, for 2026 for Meta, I mean, isn't that the sort of thing that you would probably expect for the stock that's outperformed pretty dramatically, you know, over the last 2 years or so to kind of take a pause?
Well, a pause is understandable, but I think that shift, that expense shift, that was something new. Like a pause to me is they've got good numbers, they beat the numbers. That one-time charge that people are talking about, that $15 million tax charge, that's a nothing. Just throw it out.
Thank God. Thank God he said that. Now, I did not listen to this yesterday. Thank God he said that. He's exactly right. The one-time charge is something you throw away and you do not worry about because that's all it is, a one-time charge. We heard from the CFO that this is actually going to benefit them in subsequent years. Thank you. Thank you, Gene Munster, for being a voice of reason on that.
It doesn't matter. But so I think, Dan, that it's, I'm trying to look at like what was incremental. I could understand if the stock was down 3% on good news. That's, to me, taking a breather. But down 8, 9, 10%. Investors are trying to just recalibrate, I think, something bigger. And again, that dynamic around them going more to cloud. Now, I'd also point out, like around the ambitions and around AI, and I'm all in on this being more transformative than where I think high expectations are. But Zuck basically is setting himself up to be the most optimistic of any of the big tech CEOs, as evidenced by their increase in capex. So it's going to be
All right. Look, I've been writing about Meta for probably 6-7 years now. I've been a shareholder since 2012. Okay. I've been on the Zuck train for more than a decade. This is what I'll tell everybody from my experience. This guy does not miss. And he has earned the right to forge a path forward for the company. We would have never got here without Zuck. He has put together an incredible company. Who are we to discount what he is envisioning for the future of Meta? I'm not going to discount him. In my opinion, he's earned the right to spend. He's earned the right to expand the company. And we're getting validation that everybody is spending on GPUs and chips and data centers. Now, was the metaverse a flop? Sure. Nobody has a 100% track record, and it could still work in the future. And if it doesn't, who cares? The guy didn't tap the debt market. He did it all from free cash flow. And you know what? He grew the top and the bottom line while doing it. So you know what? He gets a pass on that from me. He doesn't need my opinion. But you know what? I'll support Zuck through thick and thin at this point because he's earned that right. So I'm on board with Meta, guys. I mean, this is a blip. I think if we fast forward a year, and you can mark my words right now, if we fast forward a year, when we look back on this period, this is going to look like an opportunity. Period. I don't see how we don't get it. I don't need to listen to the rest of this one. Oh, interesting. So I guess this is from 2 hours ago with Meta AI. How long is this? 4 minutes. Let's give this a little bit of a listen. Let's see what they have to say about this. We'll get into BMNR. I'll see if I can find anything about that. I know a lot of people are on the BMR train. I'm on the BMNR train. I bought more Ethereum a little while ago. I am going to grab some more BMNR while the market is still open. You know, it's 2:55. I can dual task. Let's do it. Let's listen to this. I'm going to buy some more BMNR, and MSTR getting crushed. Okay, I mean, whatever. That's whatever. But yeah, let's do this, and I'm going to buy some BMNR, and I'm going to add something else.
On Alphabet and Meta's Q3 results, bringing Eric Sheridan. He's Goldman Sachs' co-head of tech, media, telecom research, has a buy rating on both companies. Eric, let's start with Meta because the stock is getting hit pretty hard today on those capex numbers. You know, are you surprised, and what do you make of it all?
I'm not surprised by the initial reaction. I think this market right now is putting a premium on visibility into return on capital spent. So similar to the point you guys were just discussing, the cloud backlog number at Alphabet gives investors a lot of certainty that capex put into the ground will have a revenue dynamic that you can correlate back to over the next 1 to 2 years. Mark's framing on the Meta call last night was, we've rebuilt our AI efforts, we have constructed the superintelligence labs, and now you need to give us time to have an output from those labs and those efforts in the months ahead. We think it could take well into the first half of the year before we see anything on the foundational model front coming out of Meta, and investors currently right now have very little patience for not being able to draw more straight lines between a capex dollar and a return profile.
Right, and to your point, they don't have a cloud business that can show those kinds of returns quickly. So do you think that Zuckerberg and company are going to be successful in terms of getting a return in the core business from all this investment they're making in AI?
In the core business, we think they are very highly correlated to getting a return. When you think about what they are scaling right now in terms of the creation of ads, the placement of ads, the monetization of ads, we think a lot of that is building in momentum, not losing momentum. So if anything, our confidence interval would be that they can likely maintain a 20% plus revenue growth rate for longer in the core business. The medium-term step is, can they transform their AI assistant, Meta AI, into a consumer and business-facing application that gains the type of scale that Google Gemini and ChatGPT have already achieved. That's where there's a bit of a show-me story over the next 6 months.
Before we move on here to talk a little bit about Alphabet, Eric, you probably disappointed then today in the reaction of the shares? It looks like you have a price target of $8.15, and shares are down quite sharply after the results.
Well, what we typically see with Meta shares is,
just so everybody knows, I just bought more BMNR. Don't follow me. I just bought more BMNR. So not a financial advisor. And keep in mind, what I'm putting in, God forbid BMNR goes away or something, it's not going to impact me that much. So I never make all-out bets by any means.
when Mark talks about investment cycles and there's lower levels of visibility, and I think this is the fifth such cycle I've lived through with Facebook/Meta as a public company, they typically have a negative reaction on day one, and investors generally mean revert towards paying closer to a market multiple on 1 year forward earnings power. And that's what you're kind of seeing being more reflected in the stock today.
Interesting. Well, I'd love to dig into Alphabet here a little bit. Earlier on in the show, we were talking about the strength of YouTube, and I think it's something that doesn't get a lot of attention always because of the multi-pronged business, of course, that Alphabet has. Google is always the biggest one, but particularly the momentum in the YouTube ads, up 15% year over year. When we're talking about, other.
You know what? That's because more people watch Netflix, YouTube TV, and Amazon Prime than traditional TV, it feels like. Of course, they're going to see huge momentum in YouTube ads. I mean, of course.
Areas of media changing for where ad spend is going. What do you make of the opportunity, really, that Alphabet has with YouTube?
Well, it's a great point on YouTube. Not only is there ad strength, but we believe there's a subscription revenue line increasingly at YouTube that is folded into the subscription revenue that's reported on a company-wide basis from Alphabet in any given quarter. So on the earnings call last night, what you heard from the company was that the subscription business, both on the revenue side and the gross profit side, is actually growing faster than the 15% advertising business. So on some of the work we've done by talking to folks we trust and know in the advertising industry, we believe YouTube ads plus subscription is actually a business that's slightly larger than Netflix and growing at a faster rate. And the disclosures somewhat don't show that exact picture in the way Alphabet presents, but it was very confidence building.
All right. Now, keep in mind, I don't think anybody's getting rid of YouTube Premium if they increase it by $1. I'm certainly not. I mean, I watch most of my content other than obviously The Crew. I mean, like Compound and Friends, All In, that's not on traditional TV. I mean, I just don't see anybody getting rid of YouTube Premium if they go up a couple dollars. That would be really accretive to earnings. Google Cloud Backlog is absolutely incredible. This is not something I'm worried about at all. And let's keep in mind, when they're talking about accretive for earnings with Meta, who's their competition? You know, really think about it. What they're going to be able to unlock through their offerings to the businesses that advertise with them and individuals that advertise with them is going to be huge. They're also creating a larger moat around their products that nobody can mess with. I mean, who's using stuff other than Instagram or Facebook at this point? You have more than a third of the global population on their products. I'm just, I'm super bullish Meta long term, super bullish Alphabet long term. I think 120, 130, even 150, 160 is going to look like a huge deal. It already does. Think about how quickly this freaking shot up. I mean, it's incredible. Let's see what else I had on the ticket for today. We had halftime report. Who's on halftime today? Let's see. Okay. Joe Terranova was on. Stephanie Hightower. I like the panel. Hold on, give me a minute. This is interesting, and this is okay. You guys have heard me say it's 1989, right? Not 1999 or 1996. Now we're getting Stephanie Link from Hightower Advisors saying that we're in the second inning of the AI trade. That's interesting. I mean, I'm really interested in that. I can't agree more. What's going to happen when robotics happens? What's going to happen when vehicles happen, full self-driving? There is such a long segue for what is AI going to become. Right now, it's embedded into some software. You can type some things into Gemini or ChatGPT and utilize an LLM. Businesses are using platforms like AIP from Palantir. But in the future, Moore's law is shattered. I think we're really in a position where we're not ready for the rate of adoption that's going to happen. Oh my God. Thank you so much. I appreciate it. Look, I can't tell you what to do. I bought more. It's under my cost basis. So when I look at stablecoin adoption, you look at what Anthony Noto said on the SoFi earnings call with launching their stablecoin, I believe Q1, if I remember correctly. You look at all the stablecoin talk. You look at the fact that MasterCard, oh my God. Thank you so much, full-time YouTuber. I'm not a full-time YouTuber. I took the day off. I have a ton of vacation time that I have to burn. And I decided that I will be taking my days to stream and follow the market and hang out with everybody and give my opinion. I'm just happy and really, I don't know the words to even say it, but I'm just very appreciative that all you're here with me hanging out. I really do appreciate it. And look, MasterCard, we know, is building their stablecoin on Ethereum layer 2. We know that PayPal, we know that Shopify. There is going to be so much liquidity in this and so much activity. And with each transaction burning off a little bit of ETH, this is going to become a deflationary asset, in my opinion. We also haven't even scratched the surface on tokenization. So if we haven't scratched the surface on tokenization and stablecoin adoption hasn't even matured yet, how can we be bearish on Ethereum? And how can we be bearish on BMNR? We know, or at least I know, or I speculate, that's going to be really volatile. That's part of investing. This is not something where there are earnings reports. This is not something where you can see, okay, revenue increased year over year by a certain amount, free cash flow increased by a certain amount, operating income increased by a certain amount. So you got to take it with a grain of salt. You got to expect volatility. I'm fine with it. I just, it is what it is. And I'm with it. This is a long-term play because I really do think and look, I was really bearish. Everybody knows I was only bullish on XRP, okay? For very certain reasons. The Genius Act, when it was published and signed off on, I read it. And when I read it, the framework that it gave us, the fact that we have another 3.5 years of this administration, the fact that David Sachs is the crypto and AI czar, I have to put 2 and 2 together. I'm not going to get political. I don't care about politics. You won't hear me really discuss politics. But at some point, you have to say the administration and business is aligned toward crypto now. They are using the rails, and we're going to see more adoption. If we're going to see more adoption, then I have to think it's going to be good for Ethereum, considering the lion's share stablecoin and tokenization is projected to happen on Ethereum. Then in 2028, regardless of who wins, okay, regardless if it's Democrats, regardless if it's Republicans, I can't believe a party is going to win not supporting crypto. And even if Democrats take over, I don't anticipate that they're going to rip and replace the stuff with crypto that has been put in place. I just think that we're going to be too far along, and I don't think it's in their best interest. And I think everybody who runs is going to be supportive, and that's why I'm really not that worried about this. And on days like today, I'm just, I'm a buyer. I'm a buyer. I'm not a seller. So it is what it is. All right, let's see what Stephanie Link has to say. Wait, Steve is steak eating, milk drinking. Maybe I'll run a poll one day just for my own personal ideas to see what everybody thinks on that one. We'll see.
Down 34% year to date. So if people are wondering why it's up on results that seem more disappointing versus expectations.
Oh, wow. Nick's Hobby Channel. Thank you so much. I really appreciate it. Look, I'm a SoFi shareholder. I'm not a Hood shareholder. I mean, Hood's an incredible company. Let me think about it. I'll give you an answer after this.
Some of the big tech names, perhaps it's being measured by a different standard, Stephanie?
Oh, absolutely. Absolutely. Look, it's hard in general for this industry right now from a macro point of view. But they're doing the very best that they can. I think that the expectations were for a negative comp for the quarter. So to be kind of around flattish is not a bad thing. I think they're kitchen sinking the low single-digit declines in same-store sales for the next quarter. Restaurant margins are coming down, but they're still industry high. They have, I believe, $500 million left in their buyback, or 1% of the market cap. So, I mean, they're doing the best that they can in terms of delivering on the cost structure. They've got products, they've got digital, and they've got a menu that they're revamping as well and adding to. And I think that will lead to better comps going forward. But this is absolutely classic, terrible expectations because the stock has been terrible year to date.
All right. And I know those comp sales are what were in focus for Starbucks, too, talking about turnarounds and lower expectations. I want to get your thoughts on what we saw with Meta, with that stock trading lower right now. I mean, higher capex for 2025. It's going to be even higher next year. But a lot of noise in this quarter with that cash charge.
Yeah, I mean, look, I think the numbers look pretty good in terms of the growth, but people have always been very sensitive to this excessive spend. And so for them to increase their capex to 116 to 118 billion for this year, from 114 to 116, that's a disappointment, number one. And number two, to be notably larger in 2026, that's not going to sit well with people. We just want to see operating leverage at this company, and we had been seeing that over the last couple of quarters. This is actually a departure from that, and I get it. They're building out data centers up the wazoo. They're hiring all kinds of talent for AI. They're doing it for the long term to continue to grow. But I think, near term, it's disappointing. Now, I would say ad impressions actually up 14%. That's a good number. That's a really good number, better than expected. And pricing of 10%, that shows that they're monetizing AI. And they're one of the very few that are spending all this money that is monetizing. We just don't want to see them spend this much.
But Stephanie, the flip side.
She's spot on with everything except spending this much. I don't think they have a choice. I think they have to. And I think that as investors, we're going to need to be okay with spending. Now, if Meta was the oddball out where they're the only ones spending at this rate, I'm going to say she's 100% spot on. I think that she's brilliant. Love listening to her. But as a shareholder, long-term shareholder, I'm okay with them spending right now. They're not the oddball out. This is something the best and brilliant minds in business are all saying we have to spend on this. Otherwise, we're going to be left behind.
Side of this, isn't it? I mean, you got NVIDIA touching that $5 trillion market cap, in part because folks like Meta, and there aren't that many, but folks like Meta are spending all that money on the infrastructure. So do you see anything here that's either derailing or bolstering the AI storyline that's been powering this market so much? These big names are continuing to spend. Meta perhaps seeing some results out of that. I don't know if the intelligent cloud mix out of Microsoft causes any concern, or if we have to wait for detail on the call to hear exactly what was going on with that.
Look, I think the spend is there, and it is gradually increasing, probably at a little lesser rate than that had been growing at. But they're still spending because the demand is still there. We're in the second innings of this. So it depends on which way you want to play it. You can play it with Mag 7 because they're delivering on the growth side, some monetization. They're delivering on the free cash flow, and they are investing for the future. Or you could go downstream in terms of technology. You've mentioned NVIDIA. Look at Broadcom. Look at Teradyne today, up 20%. We don't even talk about them. Then we go into Morgan's world on industrials and look at all of the grid manufacturers or improvements that we're going to see. Look at the data centers that we have to build. Look at the power that we need. So you can own things like Quanta Services and Eaton and Rockwell Automation.
This is why I respect her so much. Have I not been saying this? Now, the names that I'm saying that are adjacent plays are different than hers, but she's 100% right. Eaton probably going to do pretty good. I got to think that the energy pipelines are going to do good. I really like her analysis. I think she's spot on.
And GE Vernova and Vertiv, which is one of my favorites. So you could do that, or you could even go to the utility companies. So you're seeing spend across the spectrum of between tech and between utilities, industrials, and that's why I don't think it is a bubble. But, certainly the ones that are spending more, and we don't want to see them spend more, that's why they're taking a hit. By the way, Microsoft, I think, is down only because Azure grew 39%, but the last couple of quarters, they have been beating expectations by 300 to 400 basis points, and they only beat by 200. So, I mean, really, that's silly. If the stock is down just because of that, you buy that stock.
Listen, I'm with her, and I think it's great analysis. I think it was great analysis on her end. I mean, the one thing that I don't get is why people freak out about the spending. I keep coming back to that. Why do people keep freaking out about the spending? We got to look 3 to 5 years out. Now, I'm not sure if everybody saw the Amazon report last night that came out about the data centers with their own proprietary chips in what was it, Illinois, I believe. And this train is not stopping. It's really not stopping. Now, Chipotle, a lot of people are asking about that. I don't like the fast food business. I will look into it. Starbucks, they mentioned they didn't get into it. I think Starbucks has a big problem. Here's one of the problems. Look, I'm a customer. I'm back on the coffee train. Okay. When I was there, I order on the mobile app so I can just walk in and pick it up. Okay. I don't want to be inconvenienced with having to stand behind people talking about a pump of this, shot of that. It annoys me. Okay. Get your coffee black and move on, or get it with half and half and move on. There was somebody at the front of the line talking to them about what else can they do with a pump of pumpkin spice and a pump of this. It's like, from a business aspect, that's a bottleneck for throughput. And Starbucks is busy in the morning. It gets a little bit of a crowd in the afternoon, and it's dead at night because people are not drinking caffeine at night. I really think that they need to become a wine bar at night. I really do. So that's just my own thing. I think that if they did that, they could come out with buy their own winery, come out with their own brand, sell it in liquor stores, sell it in Costco. I think it would be great. And I think that that's what Starbucks has to do. But we'll see. I don't know. I will look into Chipotle at some point. What I'm going to do, I'm going to the CNBC site. I want to see if there's anything on BMNR. So give me a sec. Let's see if we can find out why something's happening right now. Tevis put something out. Can't go on that though. I'm not seeing anything with CNBC right now. So I don't know. We're going to have to look at it later. But let me bring this up real quick. So this was pretty interesting. So this is from CNBC. And I'm not going to play the video. I just want to show everybody the scale. There is a picture somewhere. I'm sorry. Look at this. And they're building more data centers. This is in Middle America. This is not stopping. We got the deal from Meta down in Louisiana. We know that Microsoft is expanding in Wisconsin and other places. We know Alphabet's expanding. This train is not stopping. I don't know why people are fighting it. You know what? We need to come up with a slogan, everybody. The slogan of "You can't fight the Fed." Why can't we freaking? That's a funny comment, dude. You were drunk on milk. You were drunk on milk, a wine bar? No, I'm not drunk on milk. Think about it. They already have the space. They already have people at Starbucks until 9 at night when they're open. Stay open till 11 at night. Transition from a wine bar from 8 to 11. Tell me how many people go on dates there. Tell me how much is spent. I'm telling you it would work. It would absolutely work. Think about where Starbucks is located in all the major metropolitan areas and how much it slows down after 6 p.m. People would definitely go there. People would buy it. I mean, I really think so. I mean, everybody's already addicted to Starbucks. Everybody who goes to Starbucks is addicted to it. Why wouldn't they get addicted to Starbucks wine? Think about it. I don't see a downside of that. But anyway, when it comes to the data centers, we need to come up with a slogan. You can't fight the data. Like, you can't fight the Fed, so why are we going to fight the data centers? Once again, this is something really big where when I look at this, there's no other companies that compete with these companies. Nobody else has the balance sheets. Nobody has the cash flow. Nobody else has the profitability. And here's the other side of this. When they put all this up, think about how much further they are than everybody else. Who's going to compete with them in 3 to 5 years? I like that. Don't doubt data. I like that. But in all seriousness, who is competing with them? These are the companies that are going to control the infrastructure of tomorrow. And we're going to need so much inference and so much training for what is ahead. Now, look, I'm probably a little bit older than a lot of people in the stream, okay? What I can tell you from my experience living through the 2000s and the 2010s, okay? I've never seen a technological advancement as we are seeing right now. You think about what it was like in 2005. There was no smartphones. There wasn't a lot of stuff on the internet. There was no streaming services. There was nothing. So think about what happened from 2005 to 2015. You got smartphones in what? 07, 08 was the first Apple smartphone. You started getting SaaS and cloud computing, and you started getting apps on the smartphone. And then you went from 3G to 4G and 4G to 5G. 2015 to 2023, you got more advancement. And now think about how much advancement we've had from 2023 to current, okay? AI is a transformational technology that is only going to increase productivity. Look, I haven't done enough research on it. I need to look into genomics. I don't have the time. I may end up investing in ARKG just because I don't have the time to do the research. I cannot believe that we are going to be in a technological revolution that doesn't benefit biotech and genomics. And I don't know enough about those industries, so I may just buy a fund that holds them, because you have to think that some of the problems that we need to solve are cancer. We need to solve diabetes. We need to solve a lot of things. Blindness. I think that there's going to be a lot of stuff unlocked over the next 10 years. And let's not forget, once full self-driving is regulated and nationalized, though everything's going to change. You're telling me people are going to be driving Ubers in 10 to 15 years? I don't think so. Tell me we're going to have trucking industry but with humans? I don't think so. Are you telling me that high school kids are going to be stocking shelves at grocery stores or Target? I don't think so. Are you telling me that humans are going to be unloading and loading trucks? I don't think so. So if my vision happens in the next 10 to 15 years, that's a lot of robotics and a lot of humanoid robotics, embedded AI in both, that is going to change those things. I mean, I'm not seeing a world that isn't going to be drastically changed in the next 10 years from technology. And these are the companies that are going to be the bedrock and the foundation of it. So I got to tell you, I'm really freaking bullish on these companies. And I think that there's a lot that's going to be done. I think these companies are going to generate a tremendous amount of cash flow and a tremendous amount of profitability from it. And once again, this is going to, if I extrapolate out, this can become like pipelines. Nobody is trying to compete against Energy Transfer or Enbridge or any of those companies, okay? I don't think people are going to go try to borrow $30 billion to put up a couple of data centers to try to compete with Amazon, Meta, and Alphabet and Microsoft. I don't see it. And if that's not going to happen, these are going to be the dominant players 5 years from now, 10 years from now, 15 years from now. And they're going to have their hands in everything. So I'm a buyer of these companies. And I got to tell you, Amazon is I am so excited for tonight. So excited for tonight with Amazon, because I want to see the insight on margin. I want to see what happens with AWS. I'm so looking forward to the conference call. And I'm trying to handicap this years out, not for tomorrow. Okay. So when you listen to me, remember, I look at things from a 3, 5, 10-year basis out. And when it comes to Amazon, their operating margin was 11.8% last quarter. They have over 100,000 employees. They have the largest logistical network behind the Department of Defense. They have a tremendous amount of warehouses. I got to think they're going to be able to increase their margins to 20% in the next 5 years or so. And if that's the case, I mean, let's bring up I can't type. I got to tell you, my spelling and typing has gone so downhill. It's crazy. The older I get. All right. So I'm gonna hammer this point home. A lot of people have been asking about what do I think about Amazon because earnings are tonight. So I'm gonna hammer this point home. So let's share this. All right. Forget EPS for a moment. All right, everyone. Let's look at the revenue. Now, I typically only go 3 years out because that's where you have a lot of analysts. But if we go 4 years out, because 2025 is over in 2 months, okay? 2029, there are still 10 analysts expecting Amazon to generate $1.04 trillion in revenue. All right? They have an 11.8% margin right now. So with an 11.8% margin, they're going to be in a position through robotics and through AI that they can overhaul their infrastructure, create tremendous efficiency and productivity gains. And if that's the case, with the revenue growth, I got to think that they're going to be able to pick up 8.2% to get to my 20% number. And if they get to my 20% number on operating margin, think about it. That's $200 billion of operating income. Now, keep that in mind, $200 billion in operating income, okay? They are a $2.5 trillion company right now. Let's go to NVIDIA. NVIDIA is at just over $5 trillion, okay? Their operating income is under $100 billion. So you're telling me that Amazon can't grow into a $5 trillion company, which would be a double in the next 4 years? That's outpacing the S&P. That's 25% a year. I mean, I actually think that that's very doable, if not an understatement, because if we get to the point where they're doing $1 trillion in revenue in 2029, think about, let me ask you guys something. Can you guys hear the rain? I have the window open. Is the rain annoying you or not? Because if it is, I'll close the window. I'm just looking for a yes or no. If it's not bothering you guys, then I'm just going to keep going. If it is, no, it's not, you guys can't hear it. Okay. So listen, I want to make sure the audio is good for everybody. So, all right, good. All right. So the Amazon rant, $2.5 trillion company. They're projected to do $1 trillion in 2029. If they do $1 trillion in 2029, they're going to be the first company to do $1 trillion in revenue. Think about what that headline is going to be. And then if they can increase their margin just to 20%, $200 billion of operating income, that's double what what the largest company in the market is doing right now. I got to tell you, I think Amazon could truly be a $5 to $7 trillion company by 2030. And that's a big opportunity. So I'm really bullish. I think Amazon has the most potential out of all of the companies right now. And in the short term, when I say short term, 3 to 5 years, because I don't make investments for overnight. And look, I could be wrong, but I see a long runway of growth. And I got to tell you, when it comes to Costco, all right, I really think they need to watch out, because if Amazon decides to go into the big box area, I think that Costco is going to have a problem, because I think people are going to start ordering more stuff through Amazon, because it's just a time suck going to Costco, as much fun as it may be. So we'll see. There's other verticals. Let's not forget, Amazon's the third largest advertising platform right now, behind Meta and Alphabet. I want to see what the Amazon advertising numbers are. I really do. And if they increase Amazon Prime by $2 a year, is anybody getting rid of it? No. So there's a lot of verticals for Amazon. I'm bullish Amazon. So excited for the earnings. And you know what? If for some reason AWS doesn't do what the analysts of the street want and it gets sold off, could be an opportunity. So I'll give full commentary on that at some point. I really think that it's really interesting. I want to get to some of these super chats real quick. So thank you so much for this, Nick. You know, at this point, I think they're both a hold. I'm not going to pick one over the other. I think Vlad does a great job at rolling out new products. I think the SoFi management team led by Anthony Noto does a phenomenal job with what they're doing. I'm a shareholder of SoFi. I'm not a shareholder of Hood. I'm not going to pick one over the other, but I think they both can expand going forward, and I think they're both holds at this point. So I think they're both going to do well. Thank you so much, Beauty by Design. I truly appreciate it. With your knowledge of Hedera, ETH may not be the de facto chain for tokenization. Is that the biggest risk for each? Look, the reason why I got into Hedera was because of Alphabet and IBM backing it as a protocol. It's when you get really big companies that are authorities doing it, it's interesting. I threw a little bit of money in it. It is what it is. I'm not convinced that I think Hedera is going to be something different, but I still think Ethereum is going to be where it is for tokenization and for stable coins because they're smart contract systems. So I'm not what Hedera may end up becoming, I don't think is bearish or bullish for Ethereum. I think it's just two separate things at this point. We'll say. Thank you so much, Toggle. I truly appreciate it. Listen, there's almost nowhere else I'd rather be than hanging out with everybody in the Milk Gang. Really appreciate it. Really appreciate all the support. I would not be doing this unless it was for all of you. Super excited to hang out with everybody and just talk stocks. Really, really having a lot of fun doing it. I'm glad you guys like the content. So really appreciate everything. So let me see if there's anything else. Let's see what else is going on with CNBC, if there's anybody else that came on today. This is the wrong CNBC channel. Hold on. I need CNBC TV, not actually CNBC. Oh, that's funny. San Francisco's comeback. Okay. Why couldn't look? I'm not even going to listen to it, but I mean, come on. Why couldn't they? Whatever their comeback plan is, I think they should have thought of that before businesses left. Let's see. Oh, this is interesting. Okay. All right. We're going to move to this. All right, let's bring it up. Wait, whoa. No sound? I am so sorry, everybody. Did I make a mistake? I apologize. Hold on. I thought it was still there.
Davidson. Michael, thank you very much for joining us. You have argued, I believe, on this very program and in your research that Alphabet should be the most valuable company in the world. Why?
Thanks for having me. It's an AI winner, right? I think what people are starting to wake up to is that their infrastructure advantage lets them invest in AI more efficiently than almost any other company, right, Brian? So you're seeing the results of their investment in cloud, in search, Waymo. And our view is, look, this keeps going. And because they own the infrastructure TPUs, they don't have to pay NVIDIA the same, up margin upside, that NVIDIA is demanding to invest in AI, right? So our view is, search, and this has been a big, kind of debate. Search actually gets better with AI as do the other parts of business of Google. So our view is like,
all I hear about, Michael, is that AI is going to kill search. And OpenAI now has its own browser. Anthropic has its own app. Why are you so confident that those things will not severely damage Alphabet's core business?
Because Alphabet's core business is selling advertising as part of search, right? And if you look at the challenges of other people trying to build really valuable, competitive, performance-based marketing, it's just really, really hard. So Alphabet has, that these others don't, they have a great view of who you are, either from Google Maps, YouTube, Gmail, search, right? They know it's you, Brian, not me. They have the best ability to drive, performance advertising to a better return on sales than anyone else. So our feeling is, you're watching the traffic change, but as more people deliver, ask queries that give you more and more targeted answers, the value of that answer.
Think about what we're seeing and what he just said. I mean, nobody is bearish on the street about this company, and AI should unlock a lot of potential for Alphabet. I agree with what he's saying here.
Goes up in the eyes of advertisers, right?
But don't they have to do that question, that search, that query from an Alphabet, from a Google product?
Yes, but look at the growth they've had. Fair enough, they stumbled in the beginning with Bard and their earliest, competitive actions versus ChatGPT. Look at the growth of Gemini now, 650 million people. They added 200 million people in a quarter, right? They have all the surfaces that we use. Their job is to get us to use, either AI mode in search or Gemini, and that's starting to work, right? So no doubt that ChatGPT will eat into their share of queries, but our view is that they can monetize those queries better than anyone else.
I am going to say this. So I pay for the bigger package with Gemini because I needed more space on my Google Drive. And I got to tell you, Gemini is better than freaking Grok. I thought Grok was better for a while, and I do believe it was. I think Gemini's gotten significantly better in the past 2 months. Significantly better.
Yeah, we like the bullish view on Alphabet because we've just heard so much on the other side, how Google's dead and OpenAI is going to kill it. Guess what? Record high today. That stock up 3%. All Alphabet keeps doing is winning. Michael Nathanson, founding partner, senior research analyst at MoffettNathanson. Michael, thank you. Have a great day.
All right, let's see if there's anything else that's interesting right now. Oh, all right. A lot of people were talking about, hold on. A lot of people were talking about Chipotle. Stephanie Link sells it. Let's see why Stephanie Link is selling Chipotle. This is interesting because I was going to do a bunch of DD on this. Let me see if this changes my mind and if I'm not even going to do the DD. Let's see.
Chipotle shares taking a real big hit after lowering its sales outlook as consumers, they cut back on dining as they're feeling the pressure from inflation. Shares down more than 14%. Steph Link, you sold out of this one. You got out. You don't like burritos? What's going on?
Mea culpa. This has been a problem for a while. I've been fighting it. I was looking for anything to be positive last night. Anything at all. There was not anything to be positive. They missed on the revenue number.
Wow. And everybody knows that I respect her a lot, and I think that she's brilliant, okay? For her to say there was nothing good last night, and I know Chipotle's been a crowd favorite. People made a lot of money on it, blah, blah, blah. Look, I don't eat at Chipotle. I mean, Never really been interested in it. This is crazy. Let's see what she says.
Number. They guided down same-store sales for the third consecutive quarter. The operating margins missed. The restaurant margins missed. They've lost their way. I'm not sure this leadership team is the right leadership team. And I do not want to be emotional about it, but I truly believe it, because since Boatwright has been there, they've done nothing but miss. So I sold out of it. That's one, and then I just don't feel good about it. I apologize to anyone who followed me into it. I actually am quite tempted in Starbucks, to be honest with you.
Whoa. Swapping Chipotle for Starbucks. That was not on my bingo card. All right? Not on my bingo card.
I don't own Starbucks at this moment, but the turn certainly seems to be starting very early on. But the first positive comp in 2 years with a very good leader, that's on my radar screen.
Are you more Brian? Sorry, Joe. Are you more pro Brian Nickel or Starbucks?
Both.
Okay, that's a good answer.
So I think the question that you have to ask is this idiosyncratic with Chipotle, or is this the economy, the real economy, beginning to contract? Because some of the names that we hold that have done remarkably well, Royal Caribbean, Ulta, Garmin, they have all been punished this week. And Garmin, in their quarterly earnings call, they talked about the weakening that they're seeing from the consumer. Royal Caribbean, the same case could be made.
I think it's low and medium area of consumer. The high end.
Wouldn't that affect Starbucks then?
It could. But I think you get bailed out on Starbucks because you've got a CEO that's going to restructure.
Which is different than what you have with Scott.
How about the fact that nobody's getting rid of coffee? Look, personal experience, I quit coffee for about 8 months, okay? I was drinking way too much coffee. And then one summer afternoon on a Sunday, I said, you know what? I really want an iced coffee. I haven't had coffee in 8 months. I can just have one. I go get an iced coffee. I'm like, man, that's delicious on a nice hot day. Delicious. Next weekend, I get one. Then the following weekend, I do it Saturday and Sunday. Next thing you know, a month later, I'm back to a coffee a day. So, I don't know. I'm not seeing people get rid of coffee.
Got Boatwright and Chipotle. Look, Chipotle, I think it's a combination of both. I do think low end is feeling the economic pressure, and they're losing that. They're losing that traffic at Chipotle. But I also could tell you, and this is boots on the ground, my kids and my kids' friends, they'll tell you the experience is different. They'll tell you maybe the food doesn't taste as good. They'll tell you that the environment, They'll tell you that the environment in the restaurants is not as what it used to be. Maybe the stores aren't as clean, but there's something that's different.
Well, Joe, you're hitting on something, Jim. I know you want to say something, but on the call, they talked about people 25 to 34, 25 to 35. That's where they're seeing a lot of weakness. Is this also maybe you're talking about the real economy where AI is impacting some of their sales? Because these are younger people. Maybe they're displaced out the job market. These are the people that will go to Chipotle. If you're 25 to 35, this is an overgeneralization, but you're not packing your lunch. You go out to lunch.
Yeah, I think you could make that argument, but I think there's something more. Look, I think it's about the experience.
Okay.
Right? The experience.
You look at Brinker, you look at McDonald's, you look at Starbucks. I mean, there are signs that there are okay things in the environment. So I do think this is a big Chipotle issue.
I think there probably is an idiosyncratic issue, although my son eats there almost every day. But besides that, I think there's an obvious problem here that we're kind of not touching on, which is the government shutdown. This is what I believe, that all these people who are furloughed or working without pay, and the knock-on effect of all the contractors who are not getting paid. And, look, there is going to be an effect from the shutdown. The good news of everything I'm saying, I thought about this when you were talking about the cruise lines just a second ago. The good news out of this is at some point the shutdown is going to get resolved. So this should be temporary. Side note, let's get the shutdown resolved, guys.
All right, here we go. Link, another side. I want to give you credit for owning that one. I mean, you said, listen, anybody that followed you, you apologize. You own this one. I want to go to two other names that are consumer-facing that you're also selling. It's Deckers and Gap.
Yeah, and I think that's...
All right, I'm not really interested in Deckers or Gap, to be brutally honest. See if anything else came out. Yeah, I mean, Apple will be interesting tonight also. Apple will be very interesting tonight. Oh, whose final trade is Cisco? Oh, by the way, everybody, for those of you that were commenting, and I know that not everybody follows my Seeking Alpha, that, oh, it was so easy, like it was for Alphabet. Like, I've been long the whole time. I was putting content out on April 24th about Alphabet during the freaking tariff crisis, that this was a no-brainer, and it's up 78% since then. You go back my rating history since 2022 when I started really covering them. I mean, I've been bullish the whole time, everybody, so I just want to put that out there. I wonder who is on the panel that's saying Cisco, because I got a hot take on Cisco.
On halftime with final trades. Jim, you're up first.
Cisco Systems, many fundamental things going right at the company, but the shares, they just have great momentum.
All right. Here's where I'm at on Cisco, everyone. On Cisco, this is a situation where all the AI data centers need networking, okay? When you have data center build out, you need firewalls, you need wireless access points, and you need switches. You also need the software for all of them also, okay? I think Cisco's going to do really well. I think ANET's going to do really well. We're going to need so much more networking, and Cisco has transitioned into a company that is now a software and security stack in addition to hardware, okay? So I truly believe that they are in a situation that they're going to do well. And I can't say enough good things about Cisco. I think the stock is very undervalued at the moment. I think it's been undervalued. I think it can run. So we'll see. I'm a shareholder. I've been a shareholder. I really like it. Hold on a sec. Thank you so much, 2% Milk Gang. I love it. From Vancouver. Truly appreciate it. Thank you very much. I think right now we're going to just roll down and just start answering questions. So put whatever you want in. I'll start answering questions. And if something else comes up, I'm going to go live with Amit around 4:30, 4:45 areas. So we're going to cover Amazon and we're going to cover Apple. I'm going to go on his channel. So, all right, QXO. I put a member-only video out for the Milk Gang. I will do a video at some point on QXO, but I want the Milk Gang to really be able to see that first. So we'll do it in a few days, but that one's for the Milk Gang. Listen, I like ANET. I like Cisco more, but I like ANET. I bought more BMNR live. I don't know what it's going to do, but I'm a BMNR fan. I'm very bullish on them because I'm very bullish on Ethereum. Whole milk. Whole milk. That's what I drink. Whole milk. Whole milk, whole milk. I'm bullish on Tesla Robotics. Oh, Matt, thank you so much. I truly appreciate it. Tesla's interesting. I like them a lot for a robotics aspect. I think they're overvalued now, but long term, I think they're going to be fine. I think Elon's pay package is going to get approved, and we'll go from there. Let's see. What happened to the newsletter? I can't do everything. The newsletter was just, I can't, between the job, Seeking Alpha, and now YouTube, I had to give something up, and newsletter was what I decided to give up. So we'll see what happens. I'm probably not going to do the newsletter anymore. So we'll see. Let's see. Whole milk futures, yes. Do I have a price target for QXO? No. Thank you so much, Zermatt, for the member. I truly appreciate it. Brambler, if cow milk was not available, would you drink goat milk? I'll try it. I'd try it. Never had it. I'll try it. Thank you so much. I really do appreciate it. Yeah, I addressed, Beauty, the hetero stuff. I don't know. We'll see. We'll see what happens. I think that they can both do well, so I'm not one way or another. I'm very bullish Ethereum. Like days like this, I bought more Ethereum today. I bought more BMNR today. I'm not moving away from that stance unless something happens to make me move away from that stance. Let's see. I did not talk about Altria today. I know Altria is reporting at some point. I don't think they reported this morning, did they? Hold on. Did I miss that? Oh, they did report. They're down a ton. Why are they down a ton? Why are they down 8%? What happened? I'm going to have to look into this. EPS in line, revenue missed by 50 million. Okay. It's ridiculous. Revenue missed by 50 million. They generate 5.26 billion. EPS in line, and they want to sell the stock off by 8%. All right, push the dividend up to freaking 7.5%, 8%. You got how much on the sideline? 7.4, $7.5 trillion. Some of it's going to come back into the market. I'm not worried about it. Oh my God, that's got to taste great. Thank you so much for the super chat from the Amish. Gotta love it. Gotta love it. Look, I got to go through the call. I wouldn't be worried about Altria Group. I mean, we've seen this story before. It's just, it is what it is. It's a dividend compounder. So I'm not really that worried about it. Let's see. Yeah, I appreciate everybody saying to like and subscribe. I don't like promoting myself. I would rather promote Tanner or Amit or Chris or Matt or Tevis or Roy. I would rather promote them than myself. So I do appreciate everybody trying to promote me in here. Appreciate everybody watching. Means the world to me. So I do follow Rhythm, RITM. I do follow them, and I think that they're going to do very well. I really do think they do well. So lower earnings environment, I think it's going to be good. Amazon dump incoming. Where's Amazon at right now? I wouldn't look. I wouldn't. Oh my God, they're down 3%, and there's no news right now. I mean, look, I wouldn't be surprised if you got an Amazon dump right now, depending on what happens with the earnings call and with the numbers. Look, if AWS, if the street doesn't like it, we're going to get a dump. We all know that. Is it a 1 day thing, a 1 month thing, 1 year thing? I don't know. I don't think that Amazon's something I want to get out of. I mean, and would it be the worst thing for Amazon to go to 205 and pick up more? I don't know. I've probably made worse decisions in my life, to be brutally honest. You know what I mean? Oh boy, Gatsu. It is Sir Joseph Carlson. He will forever be known as Sir Joseph Carlson because he is better than me, because he blocked me, because he couldn't handle the truth that NVIDIA should have a higher valuation than Costco. And he did not want to debate. I was very respectful. I took time out of my night at midnight to write him a 1,200-word answer to questions that he asked me. And what do I get in return? He blocks me. He blocked me. So it is Sir Joseph Carlson because he is better than me. But we will move on from that. Fiserv, I know nothing about them. I don't follow them. So, I can't talk about them. Ray, thank you so much for being here. I truly appreciate it. Next, Alternative Asset Weekly. Yeah, I mean, thank you so much. If you saw last week's episode, Ty was on from Chasing Cardboard. It was a great episode. I really enjoyed it. I will be doing more alternative asset weeklies. I'm going to try to get some other people on. And I love the alternative asset world. So I'm really into it. I'm into a lot of things. So Ty was a great guest. Definitely go follow him. Definitely check out Chasing Cardboard if you're into alternative assets. Look, I know Sam is very bullish on those companies. I started going down the rabbit hole. I had Sam on. He talked to me about it. I can't wrap my brain around it. I just can't. So I don't know. We'll see. Chevron and Exxon tomorrow. Very interesting. I'm really interested in them. I'm really interested in seeing what happens. So I like Chevron. I like Exxon. I like both of them. I'll look at FinServe. I'm not really knowledgeable about it, but I'll take a look at it. Let's see. Yeah, BM&R down 30%. That's why you can't worry about what's going to happen in the short term. You either have conviction for the long haul or you don't. I mean, it is what it is. You either have conviction or you don't. I have conviction at the moment. If that changes, we'll see. Oh, all right. I want to watch this. Hold on. I'm going to stop sharing to make sure that I share it with the sound on. So let's see this. Talking Amazon.
Reporting tonight, just in case you thought you got all the cross currents for the day's stock drivers down, the street watching for growth in AWS and a return on its AI investments. Mackenzie Segala says more on what to expect in today's Tech Check. Mac, you've had a busy week.
Yes, it has been. Alphabet yesterday, Amazon today. Their stock really trades on its cloud business, and it has been a rough few quarters for Amazon. With Google, Meta, and Microsoft all raising their capex in their latest quarterly prints, Amazon is under intense pressure to show that it has a plan to hold on to its #1 spot in cloud. Now, I will say AWS still commands 30% of the market, which is a healthy lead over Microsoft Azure at 20%. And while both Google and Microsoft are growing cloud revenue faster than Amazon, that's largely a function of scale since AWS is starting from a bigger base. But backlog is key, and Amazon heads into earnings with a weaker pipeline than Microsoft and Oracle. Though AWS CEO Matt Garman told me backlog, it's not a perfect metric to gauge future revenue growth, pointing to Oracle's surge being based off multi-year deals that aren't online yet. But it still matters. Now, the real tension, though, is positioning. Amazon has lost key AI workloads to rivals. Anthropic, its marquee AI partner, just expanded its deal with Google Cloud. And then Meta, which once leaned on AWS, recently signed a fresh contract to expand its compute with Alphabet. And this is Amazon's entire AI play right now, to be the operational backbone powering large models. So the question going to earnings is really whether Amazon could not only match the scale of competitors on capex, but also show an ROI on that spend.
What is she talking about? Did I not hear that correctly? If Amazon can, I want to hear that again. I'm sorry. I want to hear that again, what she just said.
Amazon.
Hold on. Just the last 15 seconds, everybody.
Powering large models. So the question going to earnings is really whether Amazon could not only match the scale of competitors on capex, but also show an ROI on that spend.
What? Look, I'm a little taken back, everybody. Amazon spends the most on capex out of everyone. I'm a little taken back. Now, maybe she's taking into consideration what was said last night. And if Amazon is going to come over the top, I hope that's what's being implied. It probably is. Now that I think about it, because Amazon didn't report and the other ones did. So we'll see. Look, you're going to have multiple of these companies that are going to spend over $100 billion next year on capex. So it will be interesting to see what Amazon does. It will be. So we'll see. Is Amit live yet? Does anybody know? I should text him. He is okay. I'm actually going to switch over to Amit's stream to do earnings with him. Oh, I'm never home right now. I don't know what time he goes live. Sorry, everyone. So this is what I'm going to do. I really appreciate everybody hanging out with me. I truly appreciate it. It means the world to me. I'm going to take more days off in the coming weeks and stream live during the day. I'm going to go hop on his stream. Please go over there and spam CRM so you guys can, blow up his chat with CRM the way that he tells you to do it to mine. Truly appreciate it. I'm going to sign off. I'll be on his in a couple minutes. Thank you, everyone. Truly means the world to me to hang out with everybody during the day today. Thank you so much.